All right, so thanks guys for joining me. This is Christy, Clearview Business Services, and today's mini quick tips workshop is on cash flow planning. Now, what I'm going to show you is not sophisticated, it's not complicated, it's something that I have done for personal budgeting purposes for literally decades, and I have adapted it to use it for my business, for other businesses. When I was an employee, I've used it there. So there are software programs, there are apps that will do this kind of thing for you, but in my opinion, nothing beats Excel, or in this case, I'm going to use Google Sheets. So it's not, there's nothing special, and to sort of show you that there's nothing special, I'm going to start with an absolutely blank sheet and show you how I would start, and we'll put sort of reasonable things in, and then someone might ask a question and I might say, oh, that's a good point. And then we'll edit and we'll just start with, say, April 1st and see where we get. So I'll start by sharing my screen. Give me 1 second. All right, can everybody see that screen?
Yes.
Okay.
Yep.
So this is just a G-Sheets file, a blank G-Sheets file. Excel would be fine. Some people will use paper and pen, but it doesn't allow, I mean, I like things that do the math for me. So I would encourage Excel at a minimum. So if I was starting this for April 1st, I might have the first column would typically, in my mind, be the date. The second column might be the, say, item, and then pretty much dollars. That's what I would probably do. And in my own files, I don't even have headers because I know exactly what they are. But let's pretend we are talking about a business checking account. And the business starts the month with money already in the account. Because unless it's a brand new business, you will likely never have an April 1st, a May 1st, a June 1st without some balance from the previous month. Or if it's a brand new business, you'll have a zero balance until your first transaction. So if we're doing, say, April 1st, and let's see, I might, I'll leave it left aligned, right aligned. If April 1st, I would say opening balance. And let's, with no math involved, let's say that the checking account balance from the month before is 23, 41, and 58. So this field would typically be, the cell would be equals the closing balance of the month before. And a change in 1 month will always trickle down to change the other months, but we're starting from scratch. And we're starting with an opening balance from previous activity. So we're not gonna go back and see where did this money come from, what bills have or haven't been paid. We're working, in this case, from April 1st onwards. So if you knew about some things that were coming in and going out, and you need to decide, you could decide, when can I afford to pay that bill? When do I need to shut down? When do I need to lay off an employee? You can use this kind of file for any of those calculations. So if you had some recurring expenses and you knew that on, say, April 2nd, every month, let's pretend you have, I don't know, QuickBooks subscription. And in this case, let's pretend it comes straight out of your checking and not from your business credit card. QuickBooks, I don't think you can pay by checking, but in this, we'll just use it as an example. I think my QuickBooks is like $42.50. I'm going to change this column to be numbers. Whoops, because I want them all to have the right decimals. So if I started with 2341.58, I now have a minus 42.50 because I know that on the 2nd, I have to be prepared. Unless I've canceled the subscription and I'm not expecting them to take the money, I have to be prepared for them to take the money. So let's pick a spot somewhere down below and let's start our running total. So if I do equals sum and sum the column above, it will give me the running balance that if nothing else changed, this would be your balance. It's not only your balance April 2nd, but it will become your balance for whatever is the last day you have in here. So we'll leave that there. We'll look at it again, but we'll leave that there to just sort of calculate as we go. So I'm going to put a couple of other things in. Let's say that on the, I'm going to use the calendar on my phone. Let's pretend we had an expense that was bi-weekly, like, I don't know, payroll, which if you had a set amount, let's say we put in a bi-weekly payroll, we say it's the 10th, and then the next one will be the 24th. And let's say it's the same amount every time. And it might be, I don't know, $1,625 even, let's say. So we would put that the same. If it's the same, now very often the payroll will change slightly. If you have an employee who works by the hour, that you don't know what their payroll is until they've done the work. But if you have a set amount or a set number of employees, you can also have this be, you know, all of your employees together. Like if you have 5 employees, it might be a very large number. I'm just picking random numbers to see. Now already we have a minus in our total, which means if this was all that happened in April, you would either not be able to make this payroll, or you'd be $950 into your overdraft if you had an overdraft. So this file is not made up to warn you when you're in danger. You're gonna have to, I mean, at least the way I do it, you have to watch and see, do I still have a positive balance? If we put a bunch of other things in here, we can then play around with at least the order that I do things and the way that I like to keep track of things. If we knew that we were going to have, let's pick some other random expenses. Say on the 15th, we have, I don't know, website hosting. Let's pretend that's on a monthly and you haven't canceled it, it's still ongoing. And we say that is, I don't know, I have no idea, I pay mine by the year. And then you might have, on the last day of the month, you might have a certain bank fee because your plan is whatever, $6.50 a month. You could have some other random day. You could say invoice to lawyer, because they sent you a bill with a due date, and say you hired a lawyer to work on your employment agreement, or you hire a lawyer to help you with your incorporation or something. You know the amount when they send you the bill, and you know the date it's due. So I like to calculate them by the date they're due. So if on April 2nd, you owe your lawyer $750, you can put them in even when they're not paid yet. It's a way to sort of watch and say, this is what the whole month looks like. When can I afford to pay each of these things? If this was your whole month, you're now $1,700 in the hole. You would have to have made a decision prior to this of how am I going to handle this, because I can't say yes to all of these things. I can't pay all of these bills on time. You might choose to say, the lawyer told me I could pay him late. So maybe if you put this, you know, you might want to keep track that it was due the 22nd, but maybe he's being super neat, super nice, he, she, and they've given you the option to pay a month late. And you say, oh, thank God, because I can't pay that this month. So we might take this row and just paste it down below, maybe where our May information will end up. We don't want to lose it, but it doesn't have to be in the April list anymore. We still have a minus balance, and some of these items, because I didn't add them all precisely, they're not in the right order. I like to keep things in chronological order, and I think you'll do a better job of your planning if you do put them in order. So if we, there. So these are all in order. If you had no source of income, let's pretend whatever income you had has already been received and there is no money coming in between now and the end of April. Well, you could look at these and say, well, this bank fee, I can't, that's gonna come out whether I want it to or not. It will probably go into overdraft. The bank will charge you a fee. You probably can't say, I'm gonna pay my bank fee late. I think it's gonna happen automatically. You might take this one and say, if this, let me put this here, ending balance, just so you know that that's what this one is. And we might bold this line. If you didn't pay this payroll, you now have enough money to pay all of the other bills. If this payroll was maybe just yourself, you're a corporation and this is paying yourself, you can choose not to pay yourself, or you can choose to pay yourself when you can afford it. If it's an hourly employee, you need to be honoring the payroll for the hours they've worked. It may be a way for you to say, I have to lay them off because I can't afford it once we hit the end of the month. Or you start to know that I can only make it 3 more weeks, and if something doesn't change, I'm gonna have to lay them off. So you can't just not pay if it's a regular employee. If it's yourself, you can say, I will wait and pay it later. So in this case, let's pretend this is payroll for an owner. So let's say this is my corporation and I'm paying myself. I can say, I'm not gonna pay myself until May, because I know that my business is not in a position for me to be paid in April, in which case I can pay all these bills. It's $632. The more interesting, complicated, interesting would be if you know there's money coming and you know the amount and you know the date. Let's say you are offering a monthly service and the service is $150 for the month, and your clients pay you on the 1st of every month. And you might have, so let's see, April 1st is a weekday, so we can have this. We can have this here, and we can say recurring income 150 times, say you had 3 users of your thing, and let's say it's 150. We could say that this equals 150 times 3. This now is a positive number because it's money coming in. I would suggest that you don't make plans on the money that is not guaranteed. I have clients who I bill at the end of the month, and I know how much I'm expecting from them, but I don't know how late they're going to be to pay. So I need to make sure that I don't pay a bill until I have the cash to pay the bill. And sometimes if one of my clients is 2 weeks late, I am then going to be late paying a bill because I can't, if I'm in that position, I can't pay a bill with cash I don't have. So if it's recurring, you might know this, that there were 3 users by some certain date the previous month. The next month it may be 5 users, the month later it might be 0. So if we say this is 450, well, that gives us a balance of 1,082. Okay, and let's say this recurring income is weekly, just for fun, just to give us some more items in our calendar. So if I have one on the, I'm gonna do the 1st, the 8th, the 15th, the 22nd, and the 29th. So 1st, and then I'll make one for the 8th, and I'll copy this and say the 8th, and it will get complicated, and I'll show you how to handle it in just a second. I'll just add all these first and say, here's the 15th, and then 22nd. It's much more common that your revenue will not be fixed. It's more likely it'll be an odd number, and you'll have one big order, and then you'll have maybe a slower period. It's very rare that your income is sort of like clockwork, but we'll just use this as an example. So at the end of the month, you say, yippee, I have 2882. I can pay myself. So you could go back and say, I can afford to put myself back in. I'm going to take this pay and I'm going to put it back in. And you could say to yourself, I really appreciate that the lawyer offered me the month extra, but I don't need to take the month extra because I'm good. So you might then go back and say, I'm going to put that back in because the lawyer may appreciate you paying the bill on time. A lot of times you can get a discount, or sorry, you can avoid a penalty like interest if you do pay it on time. So watch the terms from your suppliers. I'm a big fan of, I want all my clients to know that I will stop working for them as soon as they don't pay a bill. So I don't want people to say, oh, is it okay if I pay you next month? I say, fine, as long as you don't want me to work for you in the next month. If you need me, you need to be current, because I need to be working for the people who can pay me, because there's enough people who need my help. If I was to be volunteering, I would choose another organization to volunteer for. If you look at this and you say, I'm good, $507, no problem. What's more likely to happen is you want to know on what date can you pay the bills, because this right now is a very simple total of just everything in the month. It doesn't mean you have enough money on this day to pay this bill, or that you have enough money on this day to pay this bill. It just means by the end of the month, you'll be back in the positive, but it doesn't tell you what days you can pay those bills. So the way I like to do it is I would typically take any column where there's a new deposit and I move it over. So let's say I do this balance. I'm going to copy this total here. If this is the total of the column above, I'll say down there, it is the income. When the two first numbers are both positive numbers, I'll keep them there together. And whatever bills come out before the next deposit, the next positive number. Then what I would do is I would say, if this is April 8th, I would say, what is the opening balance on this day? And if this cell I'm pointing to the screen, you can't see me point, or maybe you can. This cell of the April 8th opening balance is the same as the closing balance of the day before. And then we have, okay, so if on the 8th we start with 2,700, we add 450, we take away 1625, we take away 1321, no problem. We move these to this spot. This should now be, nope, the new total as of the next date. So let me just populate this for a second. Now this is a tricky one. I have two things happening on the 15th. I'm probably going to move the website hosting down to this line. So it is underneath after this has been paid. This can be the April 15th opening balance. Whoops. And let's say that this one equals the closing of the day before. And then this one is the total. So we're still working towards the same total. We're still going to have 507 at the end of the month. But what it's going to show us, and let me just move this out of my way. If we then see this one, this is where we'll probably have an issue. I'm going to put another row in here. And I'm going to say April 22nd opening balance. I'm going to say this, let's move these over. This equals the closing balance of the month before. So it didn't quite make it to negative, but here we started with 1574. We've only added 450, and then we take away all the bills that were in between this deposit and the next deposit. It's getting pretty close. This 457 is as close to zero as this bank account gets. But if you had, for example, if the date of the lawyer's bill, let's close that. If the date of your lawyer's bill was not the 22nd, and I didn't move it up, what if it was, wait a second, and also my bank fee needs to be down below. This bank fee needs to be here. I put that in the wrong spot. Okay, let's go here. So this needs to come over. I may have gotten ahead of myself. Okay, so this is not a big deal yet. Let me put the lawyer back. Let's put this above. And this should go back to April. So if we take this one out, if we have this opening balance equals this cell, and then this one comes over, okay, it'll probably be the next, not quite. Whoops, that should be April 22nd. If in this case, let's see, that's still not a good example. Let's go to, it's all the same date. let's pretend the lawyer is due on the 17th of April, not the 22nd. And let's pretend that it is not flexible to pay a month later. And let's pretend that the amount is more than the balance in the account on that day. Let's say it's $2,000 even. The first time you see a minus in one of these columns, it means there's something that if you follow the calendar in order, you'll run into a problem. You can't pay a $2,000 bill if on that day the balance is less than $2,000. So in this case, as soon as you see a minus, that's your warning to wait a second, what did I do? What can I do differently? You might say, okay, my next pay comes in the 22nd, but the invoice to the lawyer is due the 17th. Will the lawyer accept payment late by 5 days? You ask the lawyer, they say, no problem, I understand. You may then move it down here and say, with their permission, I have moved it to after this next deposit comes in. Now we don't have any minuses. Now this date, let's say, is the 22nd. We might keep track in the details that it was due the 17th, just if you were keeping track of stuff like that. So if we then take this one out, so this total is fine, it's a positive number, and everything is fine until we get over here now. Now, if we go back and put another bank balance, there's Karen. Hi, Karen.
Hello.
So I think Nadia is the only one you don't know. She's got her video turned off, but
Hi, Nadia.
there's Karen.
Hey. Hi, guys.
Hi.
Hello.
So it's okay. So if we do the opening balance on the 29th and say we do it over here, this equals this, whoops, that, and this can be copied. We now have an issue with both of these columns. Both of these columns have a negative number. One of them is starting in the negative, and one of them is just getting to the negative. Because now, if you got permission from your lawyer to pay late, you probably don't want to delay them any further. Now is when you might say, I can't pay myself this month. And maybe you move it out of all of the columns and say, it's a nice to have, but it's not a must have, because maybe it's just for you. Maybe you have a line of personal funds, personal line of credit, something you can use to carry over for yourself. But at this point, your business can't afford in this month to pay this amount. We could take it out and say, move it down in the what will become the May section. A lot of times though, you're going to be juggling all things that have to be done. And what you might just do is like what we did here, whereas we asked and we moved the lawyer from the 17th to the 22nd because we didn't have enough to pay them when the balance was $19.88. We did have enough to pay them just 5 days later. So that works fine if you know your income. It also works fine. Let's pretend. Let me copy all of this and let's do a May version and say all of these dates. Can I do that easily? Probably not. If I change all of these to May. But the balance we're opening with will be the last column's balance from the month before, because that is the closest thing to what we have on the 30th of April, right? We don't want to start with the first week because that's only the beginning week. So if we're starting with 882, we're going to probably be in trouble somewhere. But a lot of times you'll have things that are only once in a month. So that lawyer, we don't need to pay them in May. We can take that out. The things that are biweekly, you'd want to go back and say, okay, my last biweekly payroll was April 24th. And if you look at your calendar, which I have on my phone, if you look at your calendar, come on, calendar, you want to make sure that you don't sort of lose track of, is it a pay week or is it not a pay week? So if we had pay on the 24th, the next pay would be May 8th. So if you came down here, this one is not just May 10th, it's May 8th. because it's biweekly. This, let me do the other, this pay here would be copied. It would be May 8th and May 22nd. So I'll pick a spot here and put in a May 22nd, and I will copy this one. Make this May 22nd. The things that are weekly, their dates will change. So if this weekly one ended, the last time was on April 29th, your next weekly, I've got them on Wednesdays, will be the 6th, and then the 13th, and then the 20th, and then we'll do the 22nd. Whoops, that should be May. And 22nd. No, 7th, 27th. Oops, 27th. But let's say we know that from the month before, we now have 5 users. And so it might be something that's recurring, but maybe it's recurring at a new number. And so instead of $150 times 3, we're going to do 150 times 5. And say that's the same amount for the whole month. So I can copy that new number into all of the cells for the pay, the income. This biweekly payroll needs to be somewhere over here. We want to then, as soon as we have all of the opening balances, don't need the date changed. This one was May 6th. This should be May 13th. We'll take that one out. Website hosting, let's say that is on the same day every month. It doesn't change based on the calendar. Take this one out, we take this one out, and say our bank fee becomes May 31st. And this one, now, April had 5 weekly pays, the income, but May only has 4 Wednesdays. So this last one we're gonna take out because there's not 5 Wednesdays if you get a certain amount every Wednesday. And this is all fiction, of course. So if we now are looking at our May, we say, well, these are all out of order because the things that were the set dates stay on the set dates. The things that are weekly and biweekly are shifting. So you always have to come back and say, okay, what order do these go in now? Because you don't know sort of how to arrange your opening balances. It depends on them all being in order. So if we put these all in order.
Christy?
Yeah?
Just because I'm catching up, are the columns like C, D, E, F, G, are they like Sunday to Saturday weeks or
No.
Monday to Sunday weeks?
No, they're not. They're not.
What
none
are
of,
they?
They're not. None of those. I'll explain it when I move across in this
Okay.
one.
Okay.
May 22nd. This one can move up to here. Whoops. May 22nd. Take. So if these are, except for, I need to have Facebook. Why do I have Facebook notifications? Facebook is closed. Oh, goodness, now I've opened it. Close, sorry. I thought that closing it would mean no notifications. I guess not. If I took, so these are all of the dates for the things that I've confirmed. These are the real thing for the month of May. Now keep in mind, we didn't pay ourselves this one. So I would typically first take anything that's unpaid from the month before and artificially put it at the top of the list. Even if you have to defer it again, I think you don't want it to just be lost in the shuffle between months. So maybe we say, we're gonna try and see if the first thing I can do is pay, let's say it's myself, pay myself. I would move this over here. So the way these were working, Karen, is the first balance is the opening balance from the month before, whether it comes from your bank statement, or in this case, it's feeding from the ending balance in this file. But when we started with April, at some point you have to type that number in because you're using a bank statement or something that you're not, it's not a calculation. So if this starts May 1st with 882, we still can't, the first thing we do can't be to pay $16.25. is the 882 is not going to be enough. And based on the next date of a deposit, the next date of the deposit is the 6th. So I would say the new column starts with the next date of the deposit. So if I insert a row here and change this opening balance to be the May 6th opening balance, I want to make sure that this opening balance for May 6th is the closing balance for the previous column, which is everything before May 6th, which it is. So we still can't pay this. We might still take this and move it out of all. If you move it way beyond all of the other columns, what you don't want is for it to go here and for this cell to grab it. You don't want it in anywhere. So let's just, to get it out of our way until we know where we can put it, let's move it outside all of the columns. And we'll add it back in when we can. So if this was a regular payment, that can cover, no problem. The opening balance with the next deposit, starting with 839, then we have 750. This one needs to be moved over. So we're going to do the opening balances for the dates that match the next deposit. So say May 13th. This opening balance is this, that's right. But we still, even skipping an entire pay, we're still in the minus. So we may have to say, I have to take out my pay for 2 periods because the business can't afford it. Or if you're flexible and if you're a business owner, you might be able to say, let's go to here. If we put this back in and say, you know what, I'm really struggling. I need to take as much cash as I can. If I say, take this out, and I look down here, I say, I could pay myself maybe the first 800 of the 1625 because I'm struggling and I need some of it for home. Because at least you've picked a number that will make to be a number. You've picked a number that's low enough that at least won't put you into overdraft. This number now is not 1625. It would be 1625 plus the amount you've already paid yourself. The remaining owing to yourself would be $825. If you had like that $2,000 lawyer bill, you may choose to pay $500 each week until you pay it off. If you can make that kind of arrangement, you only have to have, you know, you can pay it when you can afford the first 500, and then you make the next payment when you can afford the next 500. I'd say as long as you're talking to your suppliers and they're not surprised, don't surprise someone by not paying their bill. Tell them you can't pay your bill. Let me just plug my laptop in. Tell them you can't pay your bill. Tell them what day you can make what payment. And then ideally follow through with it so that they at least feel good that you're not leaving them in the dark. Because they're going to have a file like this that depends on your payment and so on. So in this case, if you can afford to do 800, you still have 825. When we get to here, we're still going to move this one out of the way because we can't pay that one yet. We still can't even pay the full 825 that we owe ourselves from the previous one. But then we go to here. Our May 13th opening balance has 789. Then we have a 750 deposit. This one, because whoops, this one moves over. It has now an opening balance that goes here. This would be May 20th. Now we finally have a positive balance of a high enough number that we could start off by saying, well, I think the first thing I'm going to do this month is I'm going to pay myself the rest of this. So you might copy this row, pop it in here, make it the 13th. This one goes away because that one was already paid. And then the remaining balance can move in line with the column that you can pay it in. We don't need it to live up here anymore because we've captured it below. That's just our, if we hadn't paid ourselves. We then have 679 for the end of this one. We're like, okay. Then this, we have a 679 plus 750. This one moves over. This new last opening balance goes here. We put this date here. We still are hitting a minus. And then you think, crap, can I underpay myself again? Can I do whatever? You would typically, if it's a matter of you and yourself, you would typically pay yourself this one before you'd pay yourself this one. Like there's no, you would never pay yourself the second pay if you haven't paid yourself the first pay. But What's more likely to happen, so let's say we move this and we put this one down where it fits. I would probably then make this note be that this is the May 8th pay that we're paying late. And I said earlier, Karen, that this would only work if you're a corporation paying yourself. You wouldn't choose to not pay your employees.
No.
You ideally have already laid them off and they wouldn't have done the work.
And if you're keeping track in those notes, it could be like April 24th, part A or part 1, because it might take you 2 or 3 times to finish that.
Yeah.
I was wondering as you were going, are you keeping a separate list somewhere to see that you've finished all your paydays? But that would be in QuickBooks probably.
Well, in this case, I started the month by doing all of the pays.
Yeah.
And then when you underpay one, you make sure you copy it somewhere else so that the remainder is showing. And you don't.
You could end up with several pays outstanding, and you'd want to make sure that eventually.
Yeah. Now, if this was a corporation owner, eventually you'd stop recording payroll. You don't put yourself into a minus to pay yourself. You would say, I can't pay myself. I will record the payroll the next time the business can afford it. That's more likely. But let's say this was a bill to someone else and you had flexible payment terms. You might do something like this. What I was going to show you earlier is so these 2 pays we have sort of floating out here. If we thought we could pay this one here, we're still 195 short. What you could do what I like to do is I like to do this for the whole month, and I just make my decisions at the beginning of the month and then as things change. Let's say we know we're going to be 195 short, and let's say that this is one that you can't be late on because your mortgage is banking on it. You might go ahead up above and say, okay, I'm $195 short. What can I do to change that? I am going to make more income. That'd be hard to do. If you had more expenses, you might be able to say, I need to pay a different bill late. What's more likely is we would say, if we thought we could pay ourselves the $825 here, this is the second part of the April 24th pay that was carried over from the month before. And it was fine in this column. It is not fine in this column because let's say that this is the one that you can't change. We could take this one, let's copy it out here. And what if we only pay ourselves $500? Now, not only is this a positive number, but this is a positive number because you can look sort of tunnel vision and say, well, this column's good. I can pay myself. But if there's a minus in the next column and a minus in the next column, this column isn't good anymore. You might be able to fix it in an earlier column. You might be able to borrow from a savings account. You might be able to increase your, this comment should say 5 users because I did increase it to 5. You could do something to try to increase your income. You could do something to try to decrease your expenses. If you have a way to not reimburse yourself or not pay yourself if you're a corporation owner. Or at some point, you have to then reduce the hours of your employees. Yeah. So the point that was making was if this stayed at the minus 825, it can look like this column is good, but as soon as you see a negative in another column, it means it won't be good. And what can you change in either this column or this column so that this minus no longer stays? Now, I've used an example where it's me versus me, so it really wouldn't matter. But if you were choosing how much to pay of what bill, you might say, I can pay half of this person's bill. It means I can cover this next one or so on. Does that part make sense? Yes? Everybody?
Where's the spot where you have to go sell stuff on Kijiji to get some more money to pay your bill?
Yeah, you can have
a line on the side somewhere?
Yeah, totally. So,
eat the expired craft dinner.
Yeah. So the important thing to note for a file like this is if you are an HST registered company, whether you're a sole proprietor or a corporation, these amounts, this website hosting should be the actual money that leaves your bank account. It's not the expense amount that will hit your income statement because you need to pay the full cash to later get the refund if you're in a refund position. if this business, let's say this business does monthly payroll remittances. And so on the 15th of every month, they have a payroll remittance. And so, and let's not worry about whether there's a wage subsidy or not. Payroll remittance. And once a month, we have to take out whatever, $2,500. You may also have once a month an HS, or probably not once a month, it's more likely once a quarter, but let's pretend it's once a month. We have, let's say on the 30th of every month, we have our HST refund. Just, let's pretend. So if you had an HST refund coming in of also $2,500, they'll never, whoops, not 25,000, they'll never match, and they'll never be the same amount. But this is a bill you have to pay, and you know the due date. So you can put it in, I have to pay this, or I know what the penalties will be. If you're late on a payroll remittance, you then can't file quarterly, you have a penalty, and you have interest. And you have a little red flag on your CRA account, and I think that you're more likely to be randomly selected for an audit when you have a late. The people who are clockwork on time probably never are attracting attention. And I think the people with red flags are more likely to attract attention, my unofficial opinion. The date that this comes, you may say, I hope it comes by the 30th, but maybe sometimes it comes the 25th, sometimes it comes the 5th of the next month. It may depend on, like right now, if the CRA is handling 5 million transactions because of everything that's happening today, you may need to have an income be out here in the, not in the regular column, because you don't know what date you can rely on this. And you don't want to pay bills or schedule bills, assuming this money is going to come, because if this doesn't come until the 6th of June, you're in trouble. Or you need to know how that changes things. You could choose to maybe not pay this full bill. You can choose to stop paying yourself entirely. You could just say, look, if this is my payroll, I might just say, let's just take this out. This is foolishness. Let's not pretend that I'm going to be current on payroll for May. So I've decided it's gonna be a hit, but I've decided now April, let's say we leave April. So let's go back. We're gonna leave the April one, but we're not going to have the 2 pays for May.
Are you making payroll remittances
based on the month before? So this would still be there.
Only what was actually doled out, or what was earned?
What was recorded.
Okay.
So you could say, I'm not going to pay myself. Like this one we could take out and say, I can't afford this. Nope. And you could say, okay, I'm still in a minus. You could look at this and say, I can't pay this one until this one comes in. And since this one, the date is not known, it might come in the 27th. Great, pay this on the 27th. It might come in on the 3rd of June. Great, pay this the 3rd of June. You'd have to knowingly be paying something late, or rejigging something else, or saying I have a $1,000 overdraft. I can go to a minus $9.99 before I really have to worry.
And then just add in a fee for the overdraft?
Yeah, it might be the same month. It might be the next month. It might be the 3rd of the next month. You have a $10 fee for accessing the overdraft. Or it might be based on a percentage of how much it was. It could be all sorts of things. So there are times when you want your expenses to be in a column on, whoops, what did I do? I went up to April. There are times when you want your expense to be in a column on its own because you don't know when you can pay it. And there are times when that income is income or deposit is, I'm not 100% sure of the date. Or what I do, if I was doing this for me and my business, I might say, the way I do my billing is on the 31st of April, I will date all my invoices for the work for that month, and they'll all be due. So I might have a couple of rows on the 10th of May because my billing is a 10-day billing. So I might start with May 10th, and I may say invoice client 1, say client 2, and let's say that I'm expecting In which case, if it's two deposits in a row, I leave them in the same column because it's only the minuses that you need to worry about what column they hit. So let's say I'm expecting this, and I know this exactly to the penny because I've given them the invoice, whatever, this, and this one might be this, and this one might be small one, and this one might be a big one. The trick is, first off, I need those all to have the right number of pennies. The trick is that I don't know what day these clients are going to pay. I have some clients who I say, oh, client 3, nah, they're always late. I may move them way off to the side because I can't make plans based on their current on-time payment because their track record is not great for being on time. Sometimes you have to remind them, and then when it does come, it's only a half payment. So you can put them in to sort of see them, but you might like shade them gray or something and say, this is hopeful, not definite.
Yeah.
What I'll often do is I will move all of my income that is not automated, the things that my clients have to actually say, I'm going to pay Clearview today. I might move them all to the side. And then as they come in, I say, oh, great. This client, thank you, client 1. Instead of paying on the 10th, they actually paid me on the 8th. So then this can stay in its spot because it's already in a column here. You may have decided to underpay something else, and then a client pays early. And then you say, oh, great, I can now pay that bill in full. You can drop in the income as their actuals, because banking on deposits that I have one client who owes me from October. I would have had it in this column since October. I'm now going to write it off. I think it's not going to come.
And at some point you have to think about whether you want to keep that client.
Well, that client knows that when they're ready to have any more work done, they have to pay the old bill first. But this particular client has a personal crisis that I am honoring, and I'm not bothering them. I just don't need to be tracking money that I don't expect to come. I can't make plans based on that money. It's a sensible choice for me to assume it's not coming. And then when it does, great. But you may have a case where you've underpaid something, you haven't paid this payroll remittance, and this client pays on time, and you say, awesome, because look, now I can pay this. And the hopeful, I wanted it to be paid by the 15th, now becomes an actual because this deposit came in on time. But I would caution you to not bank on being able to make your payments if you're waiting for someone else to make theirs, and they might be needing to actually send an e-transfer, and they might be doing the same thing. They could be looking at their form saying, I'm sorry, Clearview, I have to be a week late. Or it could be carelessness. It could be a choice. It could be carelessness. It could be anything. If you get a deposit from a funding source where, say you've got a small business loan and you get a deposit of $1,000 the first of every month. Well, that's not likely to change. It's not like someone is choosing to pay late. It's probably automated. What's much more likely to happen, if we scroll to the top of this, is what if this business started with a loan from Futurepreneur. Let's say the business owner is 39 or younger and qualifies for Futurepreneur, and their starting balance is a $20,000 loan. And so this, we could say the opening balance is 0 and the first deposit is a $20,000 loan. It then changes all of these. These are all now positive numbers. There's no point in not paying yourself unless you work this through for a whole year. And you know that when you hit September, you have to start worrying because your balance, this is a pretty big cushion. And with this kind of expenses, you're not going to run into much problem. It's much more likely that you start with a smaller amount. It just depends. If you're starting with a loan or funding of some sort, you may start with a big number, and then you're just seeing how many months can I last. The couple of sort of terms or theories I'll just end with is you'll hear, and now Nadia may have to do this, you'll hear lots of companies talk about their burn rate or their runway. And typically a burn rate is for a company that, say, has a lot of development costs up front where they are spending money before they're earning money. You might start with a big deposit. Let's say this is 120,000. And you want to know how many months. Hi, Ryan. Hi, bud. You want to know how many months will this 120 last? In the sort of simplest terms, if you took the difference between, let's say here. Now, typically, if you were doing a burn rate, you would probably not have income. You'd probably have just that funding. So typically a burn rate would be pre-revenue. So if I take this out, take this out. Now, as soon as you have no deposits, you don't need to separate the columns if they're all from the same deposit, because it's no longer a matter of waiting for one thing to come in. You started with 120,000. You don't need to wait for something to come in. And then basically all of these columns can go away. In this particular example, there's no value to those columns when there are no new deposits that you have to worry about the balance. So if we looked at this and we said, okay, you started the month at 120, you ended the month at 116. The difference between them, if you took 120 and took away the 116, let's say your monthly expenses are $37.09. This might be overhead related, like the cost it takes to keep the business open. Not the cost to service client. Cost of goods sold would be, a client said yes to a deal. I have to buy the thing to be able to sell the thing. That is only if you have a client. This overhead, or typically your burn rate, would be the baseline cost to just stay open. So if you said I have $3,709 a month is my burn, and let's pretend you wouldn't have a monthly lawyer bill of $2,000, but we won't worry about that. You might say the total, say the total at the end of April divided by the burn gives you your runway. I could do 31 months, exactly the same as this one, before I run out of money. It's never, no one actually has a 31-month runway, or at least not without keeping track that some things will be annual fees, some things will be monthly fees, some things will be quarterly. Pay might change. You might hire someone. As soon as you hire someone, you need to put their payroll in. And as soon as someone leaves, you take their payroll out. So you can project that you can last 31 months, but there will be a million things that change over those 31 months. It will never be clockwork 3709 every month. But you might use this and say, I can last 31 months, but I'm going to start worrying at 24 months. And you could say, at 24 months, I better have a plan, because otherwise this is going down in a flash. So the burn rate would be the sort of average monthly expenses that are not tied to servicing a client. And the runway would be the number of months you could last based on the cash you have at that average expense overhead rate. Does anybody have any questions?
And you might have covered this at the beginning. How many months would you normally try to project outwards before it becomes so variable that it's not even, or do you build a structure of the 2 weeks, and then you have the structure, or are you constantly building the next?
My personal budget, when I'm current with it, I do 3 months at a time, and I don't worry about 6 months ahead because so many of those things are not known. For my business, I basically am only usually in my current month. If I am applying for a loan and they require me to give them a cash flow projection, and QuickBooks can do a cash flow report, but QuickBooks does it after the fact. It will tell you how much of last month's cash was spent on each thing. That's not the same as planning, how can I pay my bills in the future? So QuickBooks is not a future tool the way that G Sheets or Excel can be a future tool. If I had someone who needed to know, if I'm thinking, if I sign up for that thing and I owe this much on this day, can I say yes to it? I may need to extrapolate and project out 3 more months to be able to say yes or no to whatever that offer is. If you were worried about whether you can pay your employees, you might need to do this You might not say yes to an employee's hours until you know you have the cash to pay them. I think it's much safer to incur a bill once the cash is in. Like I'm using the cash from last month to pay this month's expenses. And then the cash from this month pays next month's expenses. I don't like to be so close that if one client is 2 days late, I miss a bill. That doesn't feel good for me. So as far as how far ahead you need to do, if you're applying for a loan, you might need to do it for 6 months or 18 months. But it's very fictional once you get to 18 months. I mean, it's fictional once you get probably past 3 months. And what you don't want in this kind of thing is you don't want to overinflate your income. Don't say you're going to get 50 users if you have no chance of getting 50 users, because it will look like you can pay your bills, and really in the first month you can't. It's not doing anybody any favors. If anything, you want to be conservative on your income, and maybe over report on your expenses. That there will be other expenses that come in, and getting caught not being able to pay a bill or having a payment bounce. I mean, nobody wants their lawyer to call them to say, hey, that automated payment bounced. What are we going to do now? You want to avoid that whenever you can. So how far ahead you want to go depends on the reason you're doing it. If it's for a loan or some funding, like if you're going to the bank and saying, like the new loan option now is, I think, 40,000, you'd probably have to have a cash flow thing for at least probably 18 months. And in some cases, if you were pre-revenue, like if you started with a lump sum, you could say, if I started with 40,000, this would be my position at the end of 18 months. But in some cases, like for me, I didn't start with a loan, so my bank started with 0. So my very first month, I only paid bills as the income came in, or I loaned money from my personal to my business.
And how often would you recommend that a business owner like yourself are you in this file for the current month, like every week or every day?
For me, it's probably every day. What I end up doing is I will do a month like this, let's say May, and then let's say this opening balance is the month before. I will probably
$116,000.
That's because we projected it. This is what we're doing, the burn rate. We projected starting with a loan of 120,000 or an investment of 120,000. If what I typically do is I might bold something when the dollar amount is confirmed, because I may project 800, but the payroll, well, this one would still be 800. This invoice client one, no, that's not going to change. Let's say QuickBooks changes their prices. And in May, I thought it was 42, but it becomes 55. Once the number is known, I like to bold it. And then because I'm a big fan of shading things green, I will highlight them green to green for good. I highlight them green when
they get posted?
When I put them in QuickBooks.
Oh. Okay.
So I will always be checking, and sometimes you'll be expecting this as a deposit, and instead of $750, let's say you're getting your income through something like Square, you may think you're going to have this at 97% because it's roughly a 3% fee. So you may be projecting the $727.50, but maybe what you actually got was $726. Once you have an actual, I usually myself would make it bold. And then once it's recorded in QuickBooks as I use green for I don't need to look at it again. And so sometimes you'll know that this could be a calculation of $29.99 US. And 1 month is more and 1 month is less. You may project the average or project on the high side, but it becomes an actual. And when you know the actual, when it hits your bank account, whoops, that's a minus. There's no point in having the projection anymore. It just becomes an actual. Any questions? No? Is that what you thought this was going to be? Is there anything that you had hoped this was going to cover that it doesn't cover? And if anyone is talking, they're on mute because I can't hear them. So I
have a question. Probably
yes.
It will be useful for others.
Yes.
That's what I was doing yesterday, actually, and I was wondering where to put the credit card payments, because most of my spendings go through the credit card, not through the checking account, and I still want to track them. So I
show you.
want to make
Yeah.
it more visual, what I
Yes.
plan to spend on a
Yes.
credit card and
Yep.
when I pay it off.
Yeah. What I end up, for me, for personal, now my business doesn't have credit card, but for personal, what I do is I have a section above, you know, called RBC Visa. And I typically will put these from oldest to newest in reverse order. So let's say that your Visa is from the 23rd of one month to the 22nd of the next. So this first charge might be April 23rd, let's say. And let's say this is my, I don't know, cable bill. And let's say, in this case, it could still be a minus if you want. My cable bill is very high, or is not small. You might say this is some travel thing. And you may say that's $1,500 and some meal thing, and this is $65. Now remember, this is not what you'd put it in QuickBooks as, it's the actual total. So whether or not your meals are divided in two, the full dollar amount came out. So if we had a total of what is the balance of this Visa by this date, I would then typically say my Visa is due on the 16th of the next month. And what I would do, and this is how I do it for my personal, is I will have a recurring one here saying RBC Visa, and then I have this linking to this balance. Because I need to make that payment on that day. So I sort of accumulate them up here as I spend them or as they get charged to the Visa. So you sort of have an eyeball. And then if for some reason this 65 is 165, it will automatically flow down to here. And if you were in a pinch, like let's say this, instead of the 120,000, we went back to just 20,000, still not a problem. Let's go back to whatever our original number was, some lower number. You'd say, crap, how am I going to pay that Visa bill? I'm going to be $2,700 in the minus if I pay that Visa bill on time. But you don't want to ignore it as something that doesn't get paid. And you don't want it to show line by the purchase dates, because you're not paying it by the purchase dates. You're paying it typically. You might make an installment payment, pay half of it early, pay half of the last month's late or whatever. But I like to gather my Visas and then have them come in as one line. And then when I'm doing my next month, I would copy from here down, and I would say, if I'm going to start with June, I'm going to copy all of that, and I'm going to start with the May 23rd onwards Visas. They will be a new number here. And then you do like I did when we did from April to May. Some of these things will be weekly, you'll change the dates. Some of them will be bi-weekly, you'll change the dates. Some of these you'll say, oh, that was only ever once a month. I don't have to, or once a year, I don't have to do that. And you can say, I didn't have, the client 4 didn't come back for this month, so they just go away. And client 1's amount isn't the same amount, it's a different amount. So you're always tweaking it to get to sort of the new number. But that's how I do my Visa. But I'm glad you asked that, Nadia, because it's a good thing to have in here. If you're going to pay the full total. Now, sometimes you might say, that's the full total, but I can only pay, let's say this equals this. But let's say because of cash flow, well, you're already 2,500 in the hole. So let's move this out of the way. You might say, I can't pay the full amount, but I can pay 1,500. And you can pay 1,500 to your Visa, and then the total is the full total minus what you've already paid. So this now, the next day you can afford it, you should make this payment, which might be sort of right here. But that's a perfectly good question, and I'm glad you asked it, so I could add it in. Does anybody have any other questions? No? No? Everyone's good?
I think so.
Does that, otherwise, is it anything you weren't already doing or wouldn't have known how to do if you needed to do it?
You're reminding me of what I used to do.
Yeah.
I haven't done for years.
Yeah. Yeah.
And it's a new format. I like it. I use a different one. So
Yeah.
they're both good, just different visibility.
Yeah. And I like I like moving things out of a column and then moving them back into a column, and you might have a projected number that becomes an actual. And I mean, there's lots of people who do things with the dates across the top and put the expenses down the side. It just doesn't make me happy. But you could start with something like this, and then you could say, you know what, I really like it better the way this other person, you know, the theory is probably the same. It just might be visually, you know, offered in a different way. And there are apps that will do this kind of thing for you, but having something that is automated to be the first of every month, well, sometimes you need to pay that late, or sometimes, like, for example, on a personal budget note, my mortgage, for example, if the month is 30 days long, no, which one is it? I pay my mortgage on the 15th and the 30th, but sometimes the 30th becomes the first of the next month. And so I'm holding cash because I think it's going to come out on the 30th, but they don't actually take it till the 1st. And then when I see my actual bank statement, I say, oh, they didn't actually take that till the 1st. I then move it out and put it down. The app ones are more rigid. They don't, if you change one, it'll want to change it all the time. And it doesn't mean that it's always, the 30th is going to fall on the weekend. It doesn't always fall on the weekend. You can be very manually adjusting in an Excel or a G Sheets. And you could say, you know, this month I'm going to pay this supplier late, but I'm going to be current the next month. And I think the apps that do it are great when you can afford to pay everything on time. It doesn't give you the, how do I manage what I have and for how many months can I manage it? That's just my preference. So if anybody have any last questions before we sign off?
Do your clients ever ask you to do this for them?
Yes. So what I just did, let me take off, I'm going to take off the share, stop share, so I can see your faces again, or 3 of your faces, 2 of your faces. Yes, I just did for a client last week. The client we knew how much was in the bank today, that date. We knew the average monthly expenses for the last few months. And we said, if no new money came in, basically the burn rate and the runway. If no new money came in, you can make it this many months. If the people that you're expecting to pay on time still pay on time, you will make it this many months. And what we ended up doing was we did a sort of blend where we said, we're going to assume that 80% of people pay on time. And we did our sort of how many months can we last calculation based on 80% of people paying their bills. It may turn out to be higher or lower than 80%, but it's a foolish time to bank on 100% when the person paying you is an individual who may not be able to pay their rent. They're not going to worry about paying their bookkeeper for helping them with their taxes. I don't do personal taxes, but if it was an individual and not a business, the bookkeeper may be the last person they pay. So you may say, I'm going to assume my expenses are 100% and my income is 80. And then you can say, how many months can we last? Can we afford to hire that person? And you say, yes, it only shortens the runway by 3 months, but they may be able to create enough value that you earn more income. And so you're weighing the 3, like if you're the difference between 12 months and 15 months, if you hire someone, or sorry, instead of 15 months and 12 months, if you hire someone, your runway shrinks to 12, but what can that person bring to the table and help you earn? Because they might be doing sales, or they might be doing doing your remote work that you never knew how to do remote, and you need to pivot or die. And so you can use this kind of file. Now, in the case for the particular client, they had a very complicated forecasting file that the chief operating officer uses, and then I pump they put the projections in, I put the actuals in. I then use that file for the average actuals for the last, I did January and February actuals. And then I said, if the actuals stay the same, we'll make it this month, this many months. Yeah.
The same way that they could ask you to help them plan who they might have to lay off and when, especially given what's happening right now.
Yep.
It's the same kind of idea.
Yeah, exactly. And I've done it in the past where a client will say, we want to hire a new person at $80,000. What month can we afford for them to start? And I may say, no, you can do it in September, but you can't do it between now and then because the expenses that we already have. Or you're waiting for, sometimes there'll be especially if it's government related. If you have, for example, a SHRED claim, which is a scientific research experimental development, which is a credit you get against last year's expenses if you're doing something, Nadia might qualify, something that is solving a problem that's never been solved, doing this unknown researchy kind of stuff, you might be expecting a $120,000 deposit. And someone can say, as soon as we get that money, we're going to hire that $80,000 person. But if that claim gets rejected, we can't hire them. If that claim is delayed or cut in half, we adjust accordingly. So you can have a plan for what you do if all works well, but you have to be ready to change the plan when your claim gets rejected and it takes 6 months to fight it. And when you fight it, you only get half. Good thing you didn't already hire that person, or else you're going to be looking at some other cuts. So in this particular climate where we are right now, some employers might be closed, in which case everyone's laid off. You could do, I think the technical term is a furlough. I'm not 100% sure how it works with employment agreements, but you could say, hi, full-time person, I have no work for you for the next 4 weeks. I don't want you to leave, but I just can't pay you. Can you go for the government funding for this month while you stay my employee, so that when we bounce back, I can grab you, you can work for me again. So it's not the same as a layoff, but you can basically have no hours for them for whatever amount of time. I think once it goes past 13 weeks, you have to pay them out severance and or vacation pay. You can't have a temporary be more than 13 weeks. It's no longer temporary. But I mean, the last few weeks have been crazy, and I have clients who were ready to lay off and now maybe don't need to lay off, or thought they didn't need to and now maybe do. So yeah, this kind of work can be done for regular, I just want to make sure I cover my bills, and it can be for making big decisions like, can we hire? Do we have to lay off? Do I have to go without money? And if I have to go without money, do I need a loan to pay my bills because my business can no longer pay me?
Is it fair to say no one was asking you to predict this circumstance 3 months ago?
Nobody asked me to predict this circumstance.
Nobody had a crystal ball.
Nope. There was nothing related.
Any rainy day planning wasn't this kind of torrential downpour.
This is disaster planning. The average company is not doing disaster planning. Now, there are some industries that it is not a disaster because the work they're doing, they're working on something that needs to be solved, and the problem still needs to be solved whether people are working from home or not. But a lot of anyone's business who either, like me, I rely on my businesses having enough money to pay me. And if you're selling to the public, you need the public to have enough money to pay for whatever you're offering. If you're a hairdresser, no offense to any hairdressers, there may be a lot of people coloring their own hair. And they may make it to September and say, I still can't afford $80 because I am so far behind on the things I wasn't able to pay that I'm sorry, salon owner, I can't be the regular every 8-week client that I used to be because my new life can't afford that. Because or maybe what I would love to see is that people are more conservative. And one thing you can do, if you looked at the file again or did your own, maybe your comfort zone is, I want to always have $2,000 in the bank account. And I consider 2,000 is zero. And I don't fund. Yeah. And it's your, if something bad happened, 2,000 is not going to last very many businesses very long. Many businesses couldn't last a week with just 2,000. So your comfort level, I had one client, a company I worked for that had a deal that we had no bank fees if we had a $40,000 bank account balance. So we would transfer between checking and savings when we needed to, because they got lots of money up front and then worked their way down, and then got a big lump sum and worked their way down. So we considered 40,000 was the zero because we might as well not pay any fees. And if 40,000 is your month, maybe it's based on 3 months expenses. If your 3 months was 3,700 times 3, maybe that might be a bit aggressive. Maybe you want to have 1 month's expenses. But I think that I don't know, it's not a phrase. You only only when the tide goes out do you know who's swimming naked. Have you heard that one before?
No.
Only when and there's a meme of it. As the tide goes out, and you're standing on the sand, that's when you realize who's swimming naked, which means if you only had $100 in your account and you then lost all your revenue, it has now been made public in some ways that you were very close to the line. And if people don't have an emergency fund or don't have something like, if you just signed a lease for rent and the landlord will not give you 3 months off, you will close your business because you can't afford your lease. Because no matter what happens, you can't, if it's $5,000 a month, you're dead. And someone somewhere has just signed a lease and then they're crying today, or they just bought a car, or there are people probably who got a mortgage for a house they really had no business getting. Yeah. Because in my case, I got approved for like more than $100,000 more than the house I bought. I did not want to be one of the people who overextended my expenses and could not respond. I chose a small house. I chose a neighborhood that was less expensive. And so only when the tide goes out do you know who's swimming naked. I like that one. But it's not like I want people, I don't want people to suffer. I don't want people to close their businesses. I don't want people to be worrying about can they pay their mortgage or their rent. That's not, I think if it makes people plan more, I'll be happy. If it makes people have a little more cushion, I'll be happy. If it makes people think about, should I take the most expensive car I can manage the payments, or just the car that I need to get by? Like, don't get a flashy $50,000 car if the $18,000 car will do, because the payments on the $18,000 you'll be able to manage a lot better than the payments on the $50,000. Or if you're going to do a $50,000 car, pay cash, because if you can afford the cash, you can afford to lose the money on a monthly payment. That's a steep one too. And the number of people who will be defaulting on cars will be huge, I'm sure. A lot of brand new lease people who will say, I'm sorry, the first thing that goes is this luxury vehicle, because I'm not even allowed to leave my home. I'm paying what per month on a rental?
700, 800, yeah.
Yeah, on a Lexus that's not allowed to leave your driveway.
Yeah.
So, yeah. Any other questions?
I hope the car prices would drop so we could buy.
The car prices, yeah. I mean, it would be really nice if we could take advantage of gas being so cheap. Now, I understand gas being cheap is not good for the economy. It's not good for Alberta. It's not good for lots of places in the world. For those of us, we might be happy to actually see 60-something cents. I mean, I don't remember the last year we had gas that low. It's not good for the economy for gas to be that low. It might help your expenses this month, but if you're not allowed to leave your driveway, I'm not really, my kilometers, I don't drive that much, but I'm basically not driving at all. So I may literally drive 20 kilometers a week in the last week. And I have one client that I'm going to Dartmouth for, that they're an essential service, so they're still open. So yeah, anyway, I have a commitment starting at 11, so I'm going to need to sign off. Does anyone have any last questions or a suggestion for what the next workshop topic could be? No?
And are they always going to be Tuesdays at 9:30?
That's what I picked. It works for me. Is there a reason why it shouldn't be?
No.
No. Okay.
Thank you, Christy.
Thank you very much, Christy.
Thanks.
Do you have something in mind for next time?
I don't.
Okay.
But I only decided this topic last Thursday, so something will happen this week. Maybe payroll, because if the wage subsidy thing becomes known, I could do the payroll.
Oh, that would be good. I did it yesterday on your template, but I think I did it wrong, and I already know one error.
Yeah. Yeah. So maybe payroll, but if something else becomes more pressing, I may switch it up. I haven't made it public yet. Awesome. Thanks so much, guys.
Thank you.
Thank you very much, Christy.
Bye-bye.
Bye-bye, guys.